Hey guys, welcome to a new video. So today I'm going to be talking about COYY, COYY from GRANITESHARES, Yield Boost, and why I'm not going to be reinvesting into it anymore, even though it's paying me a very handsome weekly amount of almost $400 Australian net per week. I am not going to be continuing my investments into it, and that's what I'm going to be talking about in this video. I'll tell you why that is, my analysis, my thoughts on that. But before we get into that, of course, quick disclaimer, this video is not financial advice. This channel is purely based on my thoughts as I navigate my own personal investment journey. Please, please, please always do your own research. So let's get into it. Because COYY, it's pretty popular right now, and for good reason. It pays incredible distribution rate. It says here on its website 169%. Now, that is true, but if you take into account what I'm going to talk about, which is the NAV and how, I don't like the word NAV erosion because I think it depends on the underlying stock, but I do think there is some NAV nuances, some NAV erosion to at least this GRANITESHARES ETF, because even though it says it's 169% distribution rate for this, my distribution rate, my yield on cost for COYY is nothing like that. If we go to my position here in yellow, you'll see that my spreadsheet has changed a lot because YIELDMAX has changed everything into weekly. So now it's just a load of information, way too many ETFs that are in this portfolio. But so COYY week 2, here we go. I got paid $418. It was 159% on the website. But for me, as a gross amount, that's 120%. As a net amount, that's 102%. So that's quite different to what it claims on its website. And the reason is because the NAV has been coming down a lot. And so the distribution rate for my yield on cost based on my investment is a lot lower because the share price has declined as I've been investing into it. And this, when I started researching this, I was like, oh, the NAV looks like it's kind of stable. It looks like it'll be fine. But my problem now is that after looking into this a bit further, so COYY, what is it? It is an investment, a high yielding ETF based on leverage income of the underlying Coinbase. So if we look at Coinbase here over the last 2 or 3 months, this is its performance, right? It's gone down recently because crypto has been struggling a bit, but it had a huge bounce from 304 to 401. So what is that in terms of upside? Let's just do a percentage. We can do that on, this is TradingView, by the way. There's a free version of this, or you can have a paid version. So what is that? That's a 31% increase in the share price of Coinbase, which is the underlying stock of the COYY ETF. Now, if we look at COYY, so bear in mind, just remember what that looks like. Now look at COYY over the same period. This is the same period of time, just on share price, bear in mind, doesn't include distributions, as Coinbase. And it didn't capture any of that upside. You could say that it captured that. So what did it do? It went from there to there, 5.5%. And what did I say Coinbase did? 31%. It captured none of the upside. And so the problem is that when you invest in here and you're like, yes, 160% distribution, that's amazing, but your share price is just tanking, even though the underlying is shooting up. Look at that. It should at least be capturing some of that. Even if we look at CONY, let's see what CONY does in that time period. CONY looks pretty good. It's captured at least some of that upside. What's CONY captured? CONY has captured 23%, which is about 60, 70%, which is what you expect from the YIELDMAX ETFs of that upside. COYY, COYY, terrible. It hasn't captured it. Literally, I'm like, when I saw this, I was like, this is the NAV of this investment is going down drastically, with the underlying performing so well over that period of time, a 30% increase, and it captured barely anything of it. If you look at it, I can compare them. So let's add COYY to this chart. So this is Coinbase, what it's done. So it went up from 305 to 401. It's back down again. Okay, now let's add in COYY to this chart. We can add COYY to compare. We add that in, and this is the difference. So Coinbase is up 4.7% in the last two or three months, and COYY down 29.9%. That is the difference in the net asset value, the share price of your investment. Now you're going to say, but that doesn't account for the distributions, for the 150% dividends that I'm receiving every week. And you're right, it doesn't. So what we do now is we go here, we click adjust for dividends, and it will adjust this to be more like a total returns amount for dividends included. So what does that do? It brings COYY up a bit, but it's still down 11% in compared to Coinbase's up 4%. It still just didn't really, like, it captured, you can see here that it was there, and even with distributions, it didn't capture that amount of upside. And to me, that's really worrying. Like, I don't want to be in that investment anymore if it can't capture any of the upside. Like, this is very different if you look at COIW, which is Roundhill's Coinbase ETF. And this is the one that I really love. Like, I've talked about it in my previous videos. I love the Roundhill ETFs because I love the uncapped upside. I love to like buy the dip down here so that you can actually capture this upside. So let's just add the COIW ETF in there to compare. So we add COIW to compare. Let's see what that does. Now we've still got dividends added, and it's basically a replicated coin to a T. Look, COIW up 4, it captured all of that upside because it's got uncapped upside. It's got leverage. It's 120% exposure to the underlying. COYY doesn't do that. It's missing out on all that return. And to me, that's just really worrying. And the fact that I believe that Coinbase will go on a run in the next quarter, in the next 3, 4, 5 months. And the fact that COIY won't be able to capture any of that is just really worrying to me. So I'm not investing any more of my funds, any more of my dividends into COYY. I'm putting it all into basically the Roundhill ETFs, COIW, because it's priced quite low right now. We've had this dip, so I'm getting in there. MSTW, that's been even worse. And WPAY. I am loving WPAY, but WPAY, it struggles with, it doesn't struggle, sorry, it does really well, but it doesn't come down. I'll just show you WPAY, we'll get into it because that's really where I'm looking to put my dividends that I receive. Oh, I've got to take all this other stuff off. Just 1 second, bear with me. Okay, WPAY. So let's go all. So it's just been going up. It launched at 50. Even with that pullback, I got in around here. I reckon this is a good price, around the $52 mark. It pulled back on that Friday, but it's still been doing pretty well. I was waiting for it to come down to like 51, 52. It didn't, but I managed to get in here. So I think anything around the $52 mark is really good because I think over the next few months, WPAY is going to do really well. But just to go back to COIW and COYY, why I'm not, because I'm not reinvesting my funds into it, just to kind of, confirm this basis. If you look at total returns on stockanalysis.com, then you'll see over the last couple of months that if you put CONY, COIW, and COYY together, COIW, we know it captures the upside. So it went up during that spike, during that 30% rise, right? COIW was also up 31%. CONY was up 20% and COYY up 8% from that period. It's just not enough. And if we look at our position now, currently, we're at 10% in profit. We're still, even though with this dip in COYW, we're still up 10%. With CONY, we're still up 5%. And with COYY, we're down 6.8%. Now, I know it's high distributions, but for me, I just can't get past that NAV decline, the fact that it doesn't capture any of the upside. And so I'm not reinvesting into it. I'm getting into the Roundhill ones instead. And that's just my thoughts on it. Now, a couple of months ago, I did a video on why I was actually moving from ULTY into COYY because of the high distributions, because I believed in Coinbase. But now, I've reflected on that. I've done some more research, some more work on it, and I believe that my investment would be better placed elsewhere, some of the Roundhill ETFs, for example, rather than putting it into COYY. So, things change. We learn more, we research, and it's just evidence that ULTY it does one thing. It does a pretty decent job. I think ULTY will do pretty well in a bear market actually, because it actually has a bit of downside protection. So I'm not um, putting ULTY out into the desert, being like, I'm never going to invest into that again, because I think I will when it comes to a downside in the market, maybe a bear market. I'll be looking into ULTY again. But COYY for me, it just that NAV issue is a big problem, and I'd rather get into other ETFs, specifically the Roundhill ones. So things change based on your research. This is just my thoughts. This is just what I'm doing. Please, obviously, this isn't financial advice. I don't have a crystal ball. I don't know what will happen over the next 3, 4, 5 months. This is just my thoughts and what I'm doing. But it'd be interesting to know what you think. I've seen a lot of people also getting to COYY. So let me know what you think of it, what you think about that NAV decline that seems to be happening. Are you staying in it? Are you getting out of it? Do you love the Roundhill ones better? Let me know in the comments what you think. And thanks for watching the video, guys. Please like and subscribe, and I'll see you in the next one. Cheers.